Hey team, and welcome back to another construction chat, as I've kind of labelled them. Today we are here with Raj from Rivers Accountancy, and I did a bit of work with Raj a couple of years back now. Raj, good to see we're both aging so well. um,
Yeah.
but it was just about how construction contractors can put their best foot forward in terms of the back office stuff, and I think it's one of those things, very good with our hands, hang a door, frame a wall, get the roof looking good. And I think it's one of those things that we put it into the back of our mind, hoping that it'll turn out okay. But I think I said I touch base with you again, Raj, to kind of run through some of the best practices that you've seen in terms of, as I said, how to put your best foot forward in terms of accounting, money management, and just gauging the overall health of your business. So welcome. Great to have you.
Thanks, Jonathan. Really great to be here.
Yeah. I suppose maybe do you want to give us a little bit of your background? You're an accountant by trade, and you're working with some of the trades. So yeah, maybe just give us a bit of a rundown on yourself.
I've started. So I'm a chartered accountant. So I've worked for the likes of Grant Thornton and PwC before moving into industry, working for the likes of Dulux, Heathrow, and various other blue chips. But I really enjoy, my dad had a small business, so I really wanted to work with small businesses and have the bigger impacts there because I felt my skill set lent more to there, and then taking the skills that I'd learned from the big businesses could bring it into the small SME space. So we've been going about 10 years now, and so funnily enough, through NTT, I had a Irish surveyor there. We got talking, and as I just started in the business, he became a client, and then slowly that construction side grew. And then you just, as you grow, you learn all the plus sides and downsides, and great clients and really great looking after people, but it's very challenging. When it works well and everyone's being paid on time and the chain's fine, it's great. But we've all seen some domino chains, unfortunately, where the bigger guys go down and everything else
Yeah.
happens down to it.
So yeah, what can we do to mitigate those risks? And I think you're in London in the UK, and we are a week out from the budget. But I think today what our chat's going to focus on is best practices that you can draw from, whether you're in the US, Australia, the UK. It will have a kind of a UK slant on it, but I think there's going to be a lot for people to take from, regardless of where you're watching. So with the intro over and done with, I suppose maybe what does a healthy contracting business look like to you? Like, how do you, if someone comes to you, how do you like to see it kind of being structured, and maybe some of the not so good stories? Do you have any of those you could share with us?
I think what becomes a red flag straight away is if they've got no viewpoint of where they are with their projects and what kind of profitability they sort of expect. The common scenario is that everyone just runs it through the bank account. So I've got about 50 grand in there. That should be all right. They don't factor in, costs that are coming in, the CIS payments that they need to make for subbies, or if they're not growth status, amounts that are going to be taken off them, material prices, all sorts of stuff. VAT now is on reverse charge, which before a lot of people would be dipping into the VAT pot that they had to pay to sort of pay for their working capital. But that was a bit of a hit for a lot of people. But now they've come to manage it because they're not in the situation where they have to pay so much over. And a lot of our clients are now repayment situations, and that's helped in two guises. One, like I said, they're not dipping into the VAT that they collected to fund working capital, because when it comes due, that was a big problem. And two, because they're getting repayments, clients are more keen to actually do monthly VAT returns and consequently, we we would look to then do monthly management accounts and work with them to then build on the business and understand the position a bit more. So I
Okay,
mean,
nice. So yeah,
yeah.
so what does that look like in terms of you'd set up multiple accounts on a per project basis, or yeah, what does that look like?
So so if you've got multiple projects going on at the same time, it's tracking the projects, so either through things like tracking categories or, you know, just to make sure that you understand the profitability of that project. That every contractor's had good projects and bad projects where they even lost money, but it's trying to understand why, rather in project, while it's going on, rather than 9 months after the year end. Oh, I thought I'd made some money, or oh, that's a bit more tax than I was expecting. It's kind of, where you are during the year, and you understand where the project is really. Is your billing up to date in terms of what's being agreed with the project lines, and what you've delivered, because sometimes cash flow comes in because you paid for all the costs, but you haven't actually billed for the work. And for most people, us included, unless you get an invoice, you're not really obliged to pay it. So sometimes
Absolutely.
we're our own worst enemy.
No, absolutely. You're spot on, and I think it definitely kind of a, without even knowing it, you're plugging Assemble Pro there. Like that is definitely something I've seen on a lot of contractors that I've worked with over the years. Is if you can identify quickly, I've actually spent way more money than I anticipated to on the excavation. There was a tree there, we didn't know, we had to dig up roots, or there was something to do with the civil engineering that just wasn't in the initial plans. We've spent a lot more on the excavation, for example. If you can identify that early doors and then start to course correct elsewhere, or else know, and exactly like you're talking about, I know I'm going to take a hit on this project. I need to be, careful on my next project, or I need to be, making sure that I'm making up for that somewhere else. Exactly like you said, if in 9 months' time you're kind of reviewing the books and you think, Jesus, I actually thought I made a nice profit on that. But it turns out, oh God, yeah, do you remember that tree that we had to pull up in the middle of the site that cracked a gas pipe or something like that, So just tracking, I think, is definitely a very good recommendation for every business, not just construction businesses.
Yeah, and if that Assemble Pro helps with that, that's great, because obviously I think once you get into the on-site boots on the ground, you kind of forget how you quoted. So if something like a tree comes along that wasn't expected there, or the client conveniently forgot to tell you about, then you can go back and have a conversation. Go, look, you assured us this quote was based on the assumption of X, Y, and Z, which you said, which we discussed, or it's a learning point for next time in terms of how to better quote for things, and build in your assumption, or stipulate caveats, or if we dig it up and we find a Roman site or something like that, these have got to be the additional costs, because of we're going to put people on pause, or whatever it is, or whatever needs to happen. So again, it gives you the tool to fix and course correct your profitability and cash flow as the project's happening, rather than review it months afterwards and go, oh great.
Yeah, absolutely. So definitely, I think a paper trail, so that you can go back and say, this is what we estimated. Here is our bid. Here's the changes that you're implementing now after the fact, and then have a conversation with them and make sure that the project cash flow is working for both parties. Obviously, you want to assume that most people didn't maliciously do it, but just if there is a paper trail and you can point to it, well, then there's a good, clear communication and dialogue that can kind of take you going forward.
100%. I think that leads you on into the next point. And at the start, when you are trying to bid for it, you bid for profit rather than bid to just win the work. So there is enough margin in there for the odd small variables that are undoubtedly going to happen. That we live in the real world, but at the same time, you're not working on such razor thin margins that like one day's rain or something like that will just absolutely blow the project to hell. So you've got to be, and again, after the project's done, review, are those margins correct, and will they be able to, fund the business profitably for, and it comes
Going
back to
forward.
why did you set up the business, and is it achieving the goals that you wanted it to?
Yeah, yeah, and very good point. I was chatting with guy Patrick from Fiable. He was down in Australia, but he made that point as well. As like, sometimes trades, be they carpenters, roofers, plumbers, they're doing really good work on site, and then the next obvious progression, maybe not obvious progression, but the next progression is to go out and set up their own business. And if you're gonna do that, you need to think of all of these. You need to think of it in a holistic sense, not just, well, I was a really good plumber, so I'll set up my own plumbing company. There's a lot more that goes into it, and I suppose identifying a trusted partner, be it an accountant or whoever, I think can really help with that transition.
Yeah, 100%. And you've laid the point there. I think doing the work is almost 50% of it. You've got marketing, you've got, building bids, managing projects, managing the team, the admin side of it in terms of, keeping all the records together, and cash flow and everything else, which, as a single person working on a job, if you're employed, or, doing doing for small projects yourself, it's a lot easier versus managing people and a bigger project and stage payments and all that sort of stuff. It becomes a lot more more difficult.
Certainly does. And what are the systems that is that something like Zero or
Yes, so Zero, QuickBooks, predominant ones that we use. Also, Free Agent can do it.
okay.
And yeah, it's almost like the MTD, so the making tax digital, so reporting into HMRC digitally, so
Yeah.
keeping digital records.
So it's
No more
coming
Tesco carry bags.
it's coming down the tracks, so you might as
Yeah.
well get ahead of it. And I suppose again another thing we were talking about was kind of setting up appropriately for tax. And what I was kind of joking about is the government often doesn't look like it wants you to succeed in how it sets itself up. But I think there are a lot of tax incentives and ways that you can use the government to benefit your business. I know, like, certainly at Assemble Pro, we've gotten grants and things like that, and you can claim research and development for against certain expenditures. Now, that's a little bit different for construction. You're not going to have research and development on that, but there's a lot of ways in which the government, if you succeed as a business and you start employing people, that's music to the government's ears. So they do have a good few things that you should be aware of. And if you're not aware of them, again, I'd encourage you to reach out to an accountant that would be aware of them, so that you are maximizing. I suppose, do you have any ways in which you would recommend people structure their tax, or even how they pay themselves? What's on your list there?
I mean, again, that comes down to the individual, why they're setting up their business up. If you're just going to set it up for yourself, maybe sole trader might be the best route. If you're going to sort of grow it and have maybe have desires to have different divisions and stuff like that, maybe you can set up like a limited company with a whole co, and that way you can redistribute profits from the trading company between different group companies. So invest into property and have your plant and machinery away from your trading company.
Well,
Bit of asset protection there.
I think that's one of the ones. I think plant and machinery is
Yeah.
like, well, I see a lot of guys, there are specific ways to set up that, to purchase it and to, lease it out to your own company if that's what you're doing, or lease it out to other people's companies. So, I think definitely around that, there are mechanisms that are tax efficient in that regard.
Yeah, so I mean, on plant and machinery specifically, you can get AIA, so capital allowances on vans or commercial vehicles. Basically, the government want to incentivize people to buy assets that would help, drive the economy. They sort of clamp down a lot on cars. So the only real incentive on cars is electric cars. But again, they're incentivizing people to try and get into electric cars, and likewise, incentivize people to invest into plant and machinery to use to especially in construction, to help build more houses and all the infrastructure projects that are going on.
Yeah, exactly. But I mean, if you're going out and thinking, well, I'll buy a van, it's it's going to benefit you to be fully aware of what the allowances are there, and so as that you can make use of that. So yeah.
Yes, I mean, I think there's a few more incentives on electric fans as well. So like, you can do full expensing on those, just get them all, as in right off the full amount up front.
You get a
Uh,
cyber truck.
or I don't know where, I don't think the roads can handle it. So I think
Yeah,
you,
maybe not.
you can have it, but I think if any sort of width restrictions come along, you're going to struggle.
Fair enough.
I haven't seen one of those in the flesh. I don't know.
I
It must be
haven't
the
seen one
size of a bus.
myself, so
Yeah,
yeah. I'll have to wait until we make a trip over to San Francisco. We'll see
nice.
them all floating around.
Yeah, even on the small things, just make sure that you put your plant tools through the business, claim back your mileage, and there's but if you're a limited company, as a holistic package, look at your salary, dividends, and what you can contribute to your pension, because there's quite a good pension contributions for limited company directors. So up to about 60,000 a year, and
Yeah.
over a 3 year could be averages over there as well.
Yeah, and I think that's and that's where I suppose reaching out to someone like yourself, Raj, is going to make the world of difference to new guys who are coming in and setting up their companies, or even people who may have been gone for a while, just to make sure that they're making the most of what's available. I know pension contributions is definitely something, and again, that might have your you'll get it in the long run, but you might
Yeah.
pay less tax on your monthly salary this month instead of paying X to HMRC. You'll get it 20 years down the line, but you'll get more. So it's just about planning for the long term and planning for the long term success of your own company.
Yeah, and again, it comes down to your goals. What's your short term goal? How much do you need to fund your life your life and lifestyle at the moment? Your dreams is that rather than take the full 60,000, you put 30 in or 10 or whatever it is. That again, you want to have one eye on the future, but there's no guarantee in it. But again, you don't want the tax dog to waive all your decisions, right? You've got to live your life. You've got to grow your business. You want to may want to use those profit to reinvest into capital and everything else.
Yeah.
And obviously we're talking a couple of a week before the budget next week, so we'll see what that brings.
Yeah. We could be all thrown out by the time that gets released.
Yeah.
I think we've covered like quite a good few kind of things that people can look out for. I suppose to finish it off, for the end of the tax year, is there any kind of bullet points that you would recommend to make that a little bit easier for year end?
So I mean, for the tax year, at the end of the tax year, so obviously the tax year finishes for fiscal tax year ends in April, 5th of April. So around that time, you want to have a look at, okay, what do you think my profits are? How much have I taken out, both salary and dividends? Where am I, hovering around the basic rate mark, or am I hovering around the 100K mark? So between income of about 100 and 125K, you lose your personal allowance, and the marginal rate between that element is about 62%. So it's quite a big hit. So you want to be, and again, it comes down to your forecasting, your planning in terms of how much you're taking out, how much you can take out, and again, when you're dealing with invoicing, monitoring your profitability, you want to make sure that any dividends you take are legitimate dividends and you can take them. Otherwise, you get to the point of Section 455 tax, where it's overdrawn directors' loan accounts and stuff like that, and then at that point it's a bit too late to try and course correct certain actions. I mean, with overdrawn directors' loan accounts, you can pay it back, but then you're moving money around, and it's a bit more you're sort of scrambling to correct things rather than during the year just manage your books correctly, just to know where you are, and the tax bill is not a surprise because you've seen it way ahead of time. You've got a separate pot for that, and when the time comes, you just sort of you pay it rather than how much. It sort of gets slammed on the floor, sort of thing.
Super, super advice there. I think, from the course of the call, I think, planning is one of the biggest things. Again, we're talking construction here today, but obviously that's the same for every business. It's not just unique to us. But if you understand your project cash flow, if you understand what your tax bill is looking like at the end of the day, and if you've got systems in place that can easily identify that and allow you to plan for the future, for the next year, for the next 5, for the next 10. I think that's something the likes of yourself, Raj, can help with, or any business financial planner, accountant would be a pretty good bet to go to.
100%. Yeah, you just want to make sure that you capture your receipts through something like Dexter or Apron or something like that, and you have your bank feeding into something like a Xero, QuickBooks, or what have you, and you match up, and the bank reconciles, and you know where every penny is, and if there's a gap versus where you're projecting, you kind of know, all right, either this guy hasn't paid me, or I haven't invoiced them, and you can manage your the people that owe you money, so your customers, and also people owe money to your suppliers. So you want to keep them happy as well, obviously, because they uh, you want people to do business with yourselves going forward, and also keep on top of your customers to make sure that you can pay your guys and everyone else, and pay yourself.
It makes a lot of sense.
Yeah.
All right, well, we'll leave it there. Thanks, Raj. I'll put all of your contact details in the various channels we're doing. And hopefully if anybody is watching, and in the UK specifically, I can recommend Raj's services at 5 Rivers Accountancy, and follow us along for more.
Thanks, John. Thanks, guys.